Take the reasons the past few years aside, but companies are just staying private longer. To your point, there are all kinds of private capital options. Why subject yourself to an institutional investor, a corporate raider, a hedge fund that's shorting your position, or a bunch of retail investors that honestly just follow the Reddit rumor mill and determines your stock? And there are a lot of companies I've been reading about where they're like, well, we want to continue growing. We don't want, yeah, we need to manage cash. We're not going to burn all of our money, but if we're going to be measured by our profitability and all these earnings per share ratios and things like that, we'd rather just, spend another 5 years growing the business because we think we can do a lot more. And founders, if they're still in the driver's seat, they want to be able to do what they want to do and not be subject to not only, public investors, but also all the reporting requirements, like you were saying, that comes with it. And it just adds another layer of administrative duties.
Well, and these days too, the last few years, the sort of total raises at IPO. So the true IPO of a company, generally speaking, have been much, much smaller than in prior years. And like everybody else can read, we'll see, oh yeah, this company went public and they raised $50 million. And like, in the old days, whenever that was, you'd be like $50 million. Now that's like saying $1 million. And my point is, whether it's 50 or 100 or 250, to your comment, we're seeing private credit providers write that check. Now, granted, it's a different risk profile. It's a different underwriting analysis. It's a different repayment, right? If you're raising equity that seeks to deliver a return, a dividend. If you're taking on debt, you have to repay the debt. It's extremely important for the audience to appreciate too, I'm sure they all do, that venture debt is not disguised equity. Venture debt has to get repaid. And we still call it venture debt when we're seeing lenders write these huge checks. Maybe it's a misnomer, doesn't really matter. But the point is that if you're going to go public and you're going to raise $50 million, you really have to ask yourself, is it worth it? Is it worth it?